Good morning, everybody. This is Dennis Woodward with the Active Trend Traders. Want to say welcome to everybody. I know there'll be people filing in, but I want to always get started on time. Today joining us is Michael Bishop. Michael, welcome.
Hello.
Okay.
Thanks for having me.
Mike, it's always a pleasure to have you on because you bring that the European flavor into what's going on here in the U.S. and give us a very unique viewpoint, and so you're always a welcome guest and a welcome contributor. I want to remind everybody that all materials that we do present are for training purposes only. Traders should always paper trade prior to the risk of their own personal capital. And then here's Michael's disclaimer. Now, Michael, is this still accurate? You are still an independent investor and advisor for a Swiss
That's
wealth
all
management.
fine. That's all fine. What I haven't done in the last month is update my homepage and advertise it. So I guess there will nobody here of my folks, so we can really.
Okay, well, get that updated information to me, and I will update the slide. So I'm. Well, I hope everybody's really excited about what's going on with the markets and all that kind of stuff. At the same time, I want to remind everybody that at the Active Trend Trader, I have been a teacher and a coach for many, many, many years, and so I put a high value on the training that we do at Active Trend Trading. We've basically have set, over the last 3 months, have set an excellent foundation for people to be able to work from in trading the Active Trend Trading system. And our premium training is done on Wednesday night for premium Active Trend Trading members, and we spend about an hour together reviewing the market, but then going into something having to do with technical analysis, various other aspects. And for the premium members, the early warning alert members, that those are recorded, and if you can't catch it live, you can always catch it on the training web training tab on the website. This week we're going to go into how to find strong growth stocks in less than an hour per week. I recognize that many of you, most of us are still working outside of just trading. I trade for a living, but I'm going to be basically sharing some information on how to take that IBD 50 list and some of the other lists that IBD puts out. Most of you know that I personally do not like to do fundamental analysis. I am a technical analyst, and so what I do is I trust IBD to do my fundamental analysis for me and then produce the lists that they produce. And I'll be able to take and show you how we can go through the weekly IBD 50 list and within a very short period generate a short list. Now, I don't mean a list of stocks to short, but a short list of 1 to 4 stocks, maybe 5, that have the potential for doing something the following week, and that also reflect and represent the strongest of the growth stocks on the IBD 50 list. So if that is of interest to you, you can catch up on. If you're not a premium member yet, you can get signed up, and you can then share in the training. So as most of you are aware, after or just prior to basically the week leading up to the election, and then this past week, we've been doing some reformatting on the early warning on the Active Trend Trading's trader report, and also the entities that we're going to focus on moving forward. Primarily, they're going to be looking at a lot of some very select leveraged ETFs, and 1 or 2 stocks per week that may provide us some potential. Somebody may ask, why are we going to focus on the ETFs? Is a couple of reasons. One is that the ETFs, you get no earnings surprises, and the selected leveraged ETFs that we have chosen have provided some excellent technical triggers and technical patterns, and when they move with a lot of vigor. So so that's what I've been working on for the last 2 weeks, and we kicked that off this coming weekend and going into Monday when the traders report and the free report that we send out to the people who are subscribe to the free newsletter. We send that we're going to be sending that on a Monday. And if you're a premium member and something comes up over the weekend that looks like a potential buy for Monday that I'm going to be putting in an order for, those alerts will go out to the premium members that we have an alert. Here's what's here's what we're looking at. So leading up, okay, after the election, everybody thought that if Donald Trump was elected, the market was going to fall out of the sky and die. Well, it did that on that Tuesday night, where almost every one of the almost every one of the indexes, futures on the indexes were limit down. And Michael, were you watching that in Europe?
Not really. I mean, the timing was really kind of terrible for our time, and nothing to trade, but a couple of futures. So at I think about 2 a.m. our time,
yeah,
I went to bed, and
okay,
and yeah, I no, to be fair, I think I did not miss that much. I mean, maybe if the markets would, or if I've seen that that kind of the market collapses, then I would have covered my shorts. But yeah, you never know. So maybe I wouldn't have done so. Whatever.
Okay, yeah. I mean, it was impressive to watch. I remember I had the election news on, and then I also had I had my Thinkorswim platform up, and watching that, like in case of the Dow, I think it was down almost 1,000 points, and it was impressive. But like you said, by it once it did its reaction and through its fit about the unexpected, what was coming up, by the next morning it was almost rebounded all the way back to where it had closed the day before. So this week, what's going on? The Trump rally continues, but for those of you who read Mike Traeger's article that is on the website, and that's a blog, so anybody can go in and look at that. Just find the home page, and you can see Mike's blog, and I had sent that out to everybody. But there perhaps are warning signs about the actual health of this rally. And so the markets, what I'm calling them mixed extended markets. You look at the Russell, when we take a look at the charts here shortly, you'll see, hey man, the market came right out off the floor, and the Russell took out last year's high and is just doing really well. Why is that? So the S&P straight up rally, it's slowing down a little bit. It's I won't say that it's over, but it is definitely slowing down. The NASDAQ was basically a kind of a muted response and to the election. And some of the questions I'm sitting there looking at is, will the NASDAQ actually lead to a potential pullback? The Russell took out last year's high. I mean, it really took off like a rocket ship, but is the upswing running out of gas? So the outside influences that are going to be influencing the market through the end of the year. One, the Fed meeting with a very strong potential of higher interest rates. That meeting is December 14th. I have to question, after seeing the market, because a lot of the conventional wisdom was that if Clinton was elected, the market would rally. If Trump was elected, the market would fall apart. Well, as we see, the market hasn't fallen apart, and we can opinionate, we can provide our opinion on why that's the case, but the fact of the matter is we just want to go back to the charts and say, okay, what's the charts telling us? And are we going to get the normal Santa Claus rally into December, especially with the Fed hanging over our head? Because the probability of the Fed's raising rates in December are definitely climbing now, and so it'll be interesting to see what's going on. We've seen the I think it's the 20-year rate increase over the last few weeks, and so we'll see what takes place with that. I was a little bit surprised with the rally in the Russell, because typically, oftentimes, the Russell does not do as well in a higher interest rate environment, simply because the smaller companies usually have larger debts, and unless their rates are locked in, they on their bonds and that kind of stuff, they the cost of borrowing money is increased for them. So Michael, one of the things that I've been looking at is, it's kind of interesting that, could the market be rallying because is it rallying because of optimism with regards to steps that are going to be potentially be taken in a Trump administration to reduce the corporate tax rate, therefore allowing companies to repatriate their dollars back to the United States? And then secondly, with a reduction or a more streamlined, getting rid of some of the regulations that have just really exponentially grown over the last 8 years, that it's going to make the business climate a lot more friendly to businesses, and so it could fuel the fire of a continuation of the rally after we get some a little bit of pullbacks and all that kind of stuff. So those are where my thoughts are going right now, Michael.
Yeah, but I think, it's now after this rally, I would say the odds are maybe 50-50, or my odd feeling is maybe 40-60 to the downside. But
okay. And I can see that happening too. So
because a lot of things do not really match together.
Yeah, that's right. Yeah.
And if you just kind of try to learn from history, I'd say it's more likely that we get just a reverse to the mean.
Yeah, things are very extended now. Eric asked a question.
I think what I currently do not do to overthink is the fundamentals of what really changed.
Yeah. From a fundamental side, things haven't really, they haven't changed at all, actually.
Exactly.
The market is still overvalued and all that kind of stuff, but at the same time, perhaps, the market can always surprise us. So perhaps any type of a retreat would be a little bit less devastating. We'll see. Anyway, here's a percentage of stocks above their 20-day moving average as of today. We got a great rally, based off when it ticked off down here, reversed up, and as you can see, we're starting to get some red candles come into play. And when we look at the chart of the indexes, we'll basically see that we have our momentum indicators slowing. Haven't turned over yet, but they are definitely extended prices away from its moving average dramatically. So Eric says, is last week and this week, our Santa Claus rally? Eric, certainly it's in the proper time frame for one, but oftentimes it'll continue on into December. But we've had that, a real nice jump that was unfortunately in a lot of ways kind of untradeable because it was almost like an earnings report. You didn't want to be out there hanging while some of these huge, uncertainties that affected the whole world were going on here in the U.S. So that's where we're at with that. Let's go over here really quick. All of the indexes now have busted through their high from last year, and for some this was an all-time high. On the S&P, the Russell, the NASDAQ. The NASDAQs haven't quite, I don't think they've quite, well, it is pushing higher, and as you can see, excellent move. And what's interesting, I think, about the Russell, and this is one reason I like to keep my eye on the Russell, is that when it moves, it tends to, in either direction, it tends to overshadow the other indexes. So it's a good place to keep your eye. So let's take a look at the charts. There we go. Start with the S&P. S&P is looking very interesting. I have removed our old Fibonacci and put in a new Fibonacci from the swing high here to the swing high of this week. And as you can see, price actions on the S&P have moved up towards their all-time high, which was hit, earlier this year. Let me take one other look. Yeah, earlier this year, back in August, where it pumped up and hit an all-time high. And so we're up in that resistance zone. Prices have kind of started to turn around. What's this telling us? Do we want to get to the long side or to the short side? Well, what it's telling us is this is not a time to buy, because see how far extended we are from our moving averages. So we would expect some kind of a pullback either here to the 23.6 or the 38.2 Fibonacci. On a daily basis, the true strength indicator is starting to roll over. It has not crossed to the downside, but we want to watch for that crossing to the downside, because that tends to at least help signal a big slowdown or actually a reversal to the downside. Momentum on a daily basis is still heading up nicely. And what we've got over here on the weekly chart, as you can see, we have pushed, one can categorize this as a little bit as a negative divergence, in that we're pushing up towards the old highs. However, the indicators themselves are not moving to new highs. And so, but we do have some positive action in that the TSI has crossed, and at least the short-term TSI has moved back above the zero line. The momentum, on the other hand, is right up against the resistance that is provided by the zero line. If we are, if the rally is, let's say, has reached its maximum, expect that zero line on the momentum to act as resistance, and we'll get a rebound back down. How far down? Don't know. Let me get rid of my drawings there. Clearly a pullback into the 2160 to 2150. If it was going to be just very short-lived, that could be expected. That would be right back down around where the 50-day moving average is, and then that would be healthy in that it would basically pull back, after this big thrust up, a controlled pullback into those areas, and that's when the index would become interesting to the long side again. NDX. Okay, same. This is what I talk about with NDX. Okay, here is, let's see, 7th there. Here's the election day, right here on. And we see we get a power up, but we came back up, hit resistance at the, the 48.53, 48.50 level, came back down off that, sold back down below the 100-day moving average, and then rebounded again to, this week. But again, we're getting right back up into that same resistance area. And if we go and we draw a trend line across these tops here, as you can see, we've stuck our head slightly above the top, but clearly it is still contained within that short-term downtrend on the NASDAQ. And while we're looking at it, let's look at the comp. So as I'm running around the charts here, now the NASDAQ composite, which is made up of a few, I think a few more stocks. Anyway, it actually came up and hit its previous high, and so we know this is a fairly strong level of resistance, just shy of the 53.50 level. However, the true strength index and the momentum, true strength, it shows that it's slowing. But that doesn't mean the price action is going to turn over and roll over and die. Momentum has pushed up very nicely, and we'll wait for it to get into a little bit higher level, and it's actually breaking out from some of its old resistance also. Similar thing here. On a weekly chart, the composite, let me go back to the NASDAQ real quick. As you can see, starting to turn back up, and so I would be looking for, if we can just maintain in this, this week's range, it may provide us some opportunities going into next week to take a trade to the long side. And at this point, it's looking more positive the upside on the NASDAQ than the other. Michael, you were sharing with me early on that in Europe, the markets have kind of decided to take kind of a wait and see kind of attitude about the U.S. election.
Yeah, that was very interesting to see, and it was kind of predictable because before the election, maybe 1 or 2 weeks before,
right,
volatility in the U.S. was high, up to very high, and the stocks kind of undecided,
right,
little bit up, and in Europe, stocks were in a down channel,
right,
not much, but was really not a lot of upwards potential. But the volatility was really deep.
You mean it was high?
It was low.
Oh, okay.
Low. It was really low. So it was really, so that's very unusual. I mean, I follow this week after week for years, and that's really, this disconnect is not the norm.
So
and also after the election, I mean, the U.S. market reacted very strong, and the European market was a little bit undecided, waiting what the U.S. did. I think the first day after the election, pharmaceuticals went up pretty significant.
right.
And financials down, because there was the fear that kind of Trump makes it difficult for them to do business in the U.S. And I think that the next 2 days, all the big U.S. Banks went up like crazy.
Yes.
And so the Europeans went up too. So yeah.
And so
and now we have a reversal. I think now 2 or 3 days. European banks are quite weak. So.
Okay. On the global or European global aspect, what are some of the landmines that are out there that could, you know, that are going to be worrying? I mean, I know that the threat of terrorism is always an ongoing thing, and then, you know, and that type of thing. But from a
Yeah, but that's not market relevant, I
yeah,
would say.
but you know, what about from an economic standpoint? You know, um,
Yeah, I mean there is easy to answer.
okay,
December 14, December 4. That's this referendum of in Italy
okay,
of Renzi, and the, the the case is and it's a kind of a package of a big reform, and it would allow Renzi to implement a big reform in Italy, and I think it's one that is. I have not a big confidence that it really will help a lot, but I'm pretty sure if it's if he even can't implement this reform, then things really don't look good.
okay,
And and if this referendum gets not a yes, then he is in real troubles, and most probably he will resign,
okay.
and then we have the mess we had on in Italy kind of for decades with little interruptions.
Wow. Okay.
And the opinion polls are pretty clear that it's kind of a 50-50, if not even worse. And on the other side, there was just a study of the CEOs and managers. They will vote, I think, for 90% for yes.
Okay.
So it's pretty comparable to Brexit, but the implications are not that heavy. But you have one economy that is not that small, that is in turmoil again.
Wow.
That's never good.
And that seems to be a continuing saga on the European side. So we should just look for 2000 or December 4th for that coming on down.
Yeah.
So okay.
Yeah. Or
Here's our,
just the chart, or just the chart of today. I think there was another opinion poll coming out that even showed that the majority is against the referendum, and EWI, the Italian ETF, went almost crashed.
oh
I
wow.
mean, just because I thought about it. I mean, Italy is hard to trade. I mean, these stocks on the stock exchange are not very liquid. The market is not liquid. For U.S. investors, I'd say almost impossible, but also for European investors. I mean,
Okay.
it's
So
not a market to trade.
here's a follow-on question, and then we'll get back to the chart. The follow-on question is: I know that you're quite active trading across Europe, but what are what are your favorite liquid markets to trade there?
Well, number one, definitely Germany,
Okay.
and plus the it's a handful of big Swiss stocks,
Okay. Okay.
and about, if you're interested, half of them you can trade as ADRs in the U.S. markets
Okay.
in
Well,
dollar.
no, that's good to know. So basically, you're looking for quality, quality places to place, to do your investing. So cool. So
Just if somebody's interested, CS, that's Credit Suisse, that's the second biggest bank of Switzerland and the top 5 in Europe, and it looks like a nice short, and it's very liquid, so that's
Okay.
not a...
So is Credit Suisse, is that where all the United States people hide their money in the Swiss bank account?
Well, I mean, it was a huge thing. I think UBS was the leading one, and Credit Suisse.
I meant that kind of as a joke.
Copying the model and a lot of them more. But I think at the end it brought them so many troubles.
Yeah.
And this business model really doesn't work anymore.
So okay, yeah, I meant that.
So
I meant that.
At the end, I'm bearish to very bearish in the long term for these universal Swiss banks.
Okay, thanks, Michael. That gives a good picture, you know, of what gives us a good taste of what's going on over there. So
I don't know what you think about, but if you take the big Citigroup, Wells Fargo, etc.
Yeah.
Do you think they can really be successful in the next decade or 2 decades?
Yeah, I mean, you know, we shall see. There's going to be, we'll see what the change in Washington brings for the banking industry, and you know, the verdict's out at this particular point. But so, hey, here's the Russell. As we can see, broke past its highs from last year and is still moving up. At this point, I mean, this was almost a straight up the bottom. I mean, this is almost a 90-degree vertical, acceleration here, which can't, is one of those things where that kind of momentum cannot be maintained. We're starting to see a little bit of rollover, but things are still pushing higher very nicely. Same thing, good rebound from a weekly perspective, moving on up. Now's where you want to start paying attention to at what levels in the past has the index run into trouble. And we can just pop over, look at a couple of years of the, this going back to, first part of 2015. Just take a real hard look here to see, over the past few years. This is something that you can do over the weekend. Is typically the TSI, it does not get above 50 very often, and even though it can start pushing higher, that tends to be a place where it wants to rest a little bit. And with the momentum, very seldom does it get over a 100, and so we're seeing both prices extended and the momentum indicators also extended. And so while I would be looking at those as okay, we haven't got a signal yet that it's going to go back into even a pullback at this particular point. And so we'll see how. That's what we want to be paying attention over the next couple of weeks, is how will the index work off its extremely overbought condition. Same thing, what was that? It looks like first time the weekly is above the Keltner. Yeah, that is absolutely correct, Kieran. First time in a long time it's been back above the Keltner, and so we know that it is extended, and so extended definitely away from its moving averages, healthy moving up on the momentum and the TSI, but we can do the same thing here on just take a look at, and again, this is weekend review kind of stuff, but go back in time and you can see, okay, how high does it get typically before it does at least some sort of a rollover. And that's, once you know that, as you can see, okay, here's one here back here in 2011, the TSI started rolling off and providing negative divergence, even though the price action was moving back up, to the Keltners, and then, getting ready to drop off. So that's what we're, basically looking for right now. As we see over here, the push up, if this is not a sound, we'll see. Well, like I said, we'll see how the we'll see how the rally kind of relieves itself, and that's a really poor choice of words, but you know, how does it digest its gains? But like I said, that is an exercise for the weekend, just to kind of say, okay, in the past, where's it gotten to? And are the charts telling me right now, be patient? And from my perspective, that, you know, that's what they're, you know, kind of telling us right now, is just be patient and let things work out. Wait for things to get back into where they're interesting, which for me with the active trend trading is when they start mixing around with the moving averages and or, you know, drop back down into, and I do want to do one thing here before we continue on. If this is, you know, today's the high day, and typically you're going to get a 1/3 to 2/3 pullback off of that, where do you pull back to? And isn't it interesting that this 38.2 retracement is right at a, you know, former support area? And so you've got a support zone that runs from about the 1254 up to about 1263, and so that would be a very strong level of support for a, you know, controlled pullback. Now if we just dive out of the sky, it may stop there, but we'll see what transpires after that. How do we interpret that the SPX and NDX are at resistance, but the Russell broke through? Is the Russell a leader or generally a follower? Lots of mixed signals to me. Eric, you're absolutely right. There are lots of mixed signals. Typically, the Russell, well, is the Russell a leader or a follower? In a lot of ways, especially to the downside, the Russell tends to be a leader. You'll start seeing the cracks in the armor with the Russell first, and you know, and then, but we have to ask ourselves, what's behind this engine that's making this go up like this? The S&P and the NASDAQ outperformed the Russell in 2015 nicely, and so the Russell had some catching up to do. And so but watch who is leading, because if the other two indexes do in fact start going into their pullbacks earlier, you know, sooner than the Russell isn't going to hold up the other two indexes. And if it's a healthy pullback, the Russell will eventually roll over and catch back up with them. But this does point out, though, with the Russell, what's, you know, really great about this entity is when it does make up its mind and kick it in gear, it kicks it in gear oftentimes more violently than the other two indexes. And that may be because it takes into consideration all the stocks that are within it, and it's not weighted, whereas in the S&P and the NASDAQ, you have it's a weighted index, and that weighting can sometimes mute the moves. Bob asked a question. I'm going to keep an eye on my time here, guys. Okay, Bob asked a question. What's the basis for determining if the market is overbought? Because that is such a macro outlook without supporting details to confirm. Typically, it's when the people use their technical analysis, Bob, they're looking for when the momentum indicators and or what other indicators you're looking at get extended or get back to extremes. That's typically characterized or defined as being overbought and or on the other side oversold when it gets to the extremes to the downside. The other indicators that show us that it is how far are we away from the moving averages. As Kieran brought up a little bit earlier, on the weekly chart of the Russell, we have punched through the upper Keltner channel. That is also another way of defining that something is overbought and or oversold when it punches it to the downside. And what is expected after you get such a condition is a reversion to the mean or a move sideways until the mean catches up with the price action. So I hope that answers your question. Good question. So that's it for the Russell. Let's go back and see what else is going on here. So path of least resistance. Michael, what's your vote on path? Are you voting to the downside, sideways, or to the upside? And short term, long term?
Well, I'm still not at my favorite scenario, and it's about it's almost 2 years old, and I thought that I was then bearish and thought that the market needs a strong movement to the upside to a ridiculous level, and then we will really have the crash.
Okay.
And I think for 2 years now it's fighting, but we are still not at the point where you have to say, I mean, that's ridiculous.
Yeah.
And that makes it difficult. So my favorite strategy is right now concentrating on short term plays.
Okay.
Yeah, volatility is great, and I think every month almost every week you have some nice opportunities, but I'm definitely not greedy at this time.
Okay.
For instance, just to give you some little ideas, copper, I think it's overdue for a correction. That was too fast. Same with Russell. On the other side, gold and bonds have been a little bit too much, went too much down, and stuff like that.
Okay, cool.
And I totally agree on your comment that Nasdaq, or the difference between Nasdaq and Russell, went too big in a time that was too short, and so an adjustment was overdue.
Yep.
I mean, now it's questionable if we get a reverse to the mean within the next weeks or not.
Yeah. So, well, I'm kind of like in the same boat you are. I mean, yeah, we're in a short-term rally. And I think what you're talking about, we'd like to see almost a rally that would be, just like you said, insane, to be kind of a capitulation exhaustion move, if you will, a real hard push up, and then you know, to be sure that, hey, this is the top of the bull market, if you will, because now, you know, the bull's back in gear. I'm more or less looking, you know, short term. I think we're looking at a pullback. As long as the pullback isn't too severe, I think this rally can continue. I think there's going to be an optimum, and we'll see what happens in the first 100 days of the Trump administration. See what kind of how they you know, hold up their promises and that kind of stuff. But I want to be kind of, you know, we have been trading in kind of a sideways move, and we may see a continuation of a sideways move, but with a really big range. A really big range. So that's what I'm looking at. And moving right along. So good points. So here's where we're sitting with our performance to date. We dropped a little bit, you know, pre-election, and I've been more or less really light on my exposure in the market over the last 2 weeks, and we'll be working towards. We got a little bit of a drop in our equity curve, but overall for the year, I'm not unhappy with where we're at. Just to highlight for everybody, one of the strategies we've been using is strategy number 3, which is we own leaps on Tesla, we own leaps on Nugget, and we own leaps on the spiders. And here's an indication of and what we're trying to do with this is basically pay off our investment plus generate a return. So at this particular point, we've got about a 75% return if we were to sell our long leaps and close out all the short position. This is something that I sell premium against every week, or at least try to, if the conditions are correct. We have already paid for the underlying in this case, and what it's doing is generating income about $273 per month per week, and on average over the last since we opened the position in June, which is about $11.21 per month. This week, and this continues to change, need to collect about $669 per week in clear premium to reach 100% return. We closed a position earlier in Tesla for the year that we did achieve the 100% return, which paid for the position plus gained another 100%. So we're currently trading these things. So future presentation events, here's some of the things that are just coming down the line. The monthly BAM meetings that we usually have in San Jose with the Bay Area Moneymakers. We're going to have 2 webinars instead of at the Masonic meeting for going into December. And they're going to be covering closing out 2016 and getting ready for 2017. Wednesday night we're doing the webinar, training webinar on how to find strong growth stocks. New training videos are available for premium members. Some of the enhancements I've been working on over the last couple of weeks while waiting for the market to kind of shake out after the election is, one, a revised traders report that is now going to be coming out on Mondays that does include also the free report. We've been working on night before pre-market alerts, sending those out so people can be ready to trade the next morning. Final hour trade setups on Fridays, which I'm going to be going from this session directly into that. And then trading leverage ETFs. Those of you who sat in on the webinar on Wednesday night, and for the last 2 Wednesday nights where we've covered that, right now we've got some great candidates that are setting up. They just have not provided us a point to pull the trigger on, and we're not going to rush. It basically requires diligence to watch your watch list every night. It requires patience and discipline. That's what. So if you have a group, I would be glad to present to your group via webinar, or if you're here in Hawaii, I'll be glad to come over and do it there also. So active trend trading system is based on the 5 pillars of active trend trading, in that we identify what to trade: top quality growth stocks, index ETFs, and I can add another one to that, is leverage ETFs now. The system shows you when to enter, when to exit, what strategy we're going to use, and what to expect. Often when I see so many traders, they focus on the strategies without having a solid system below them, a foundational system. That's why I spend a lot of time coaching on the active trend trading system, and then I only do 3 strategies: portfolio building, a small percentage of the trading capital is identified for basic options, and about 25% is identified for the wealth building over here. So Michael, next week is Thanksgiving here in the United States, and so Thursday will not be the market will not be open.
Friday will be a low volume day too.
Yeah, Friday, I can't remember if Friday's a half day or not. I will get that information, but everybody have a great, and I'm going to answer the questions that have been asked. Have a great Thanksgiving. you know, watch some football if you like football. And Michael, whatever you guys do on Thanksgiving over there, have a good one, okay?
Thank you.
Okay, awesome. So those of you who are premium members, just stand by. We'll be up on the following is next is the final hour. And I wanted to highlight everybody. I just opened a Twitter account for active trend trading. I am figuring out how it works. I'm also enlisting the help of some young people, IT people, to get me more current so that things go out quickly and all that type of stuff. And so I'm excited about that. But here's our presence, Active Trend Trading at trend_DWW. So if you're a Twitter person, you can check us out there. And that I want to highlight one thing that's going to be added for everybody who follows active trend trading is I'm going to start putting out a trade of the month, highlighting at least monthly, but a stock or index ETF that I'm going to share the triggers with anyone who is, you know, on the mailing list. Will get a copy of that, and I'll be posting that to both Twitter, Facebook, and on the website. I don't tweet. No, Eric. It'll go out via the other communication channels also. So a quick couple of questions. Are you looking for breakouts from pivots? No. I'm not a breakout. I don't trade breakouts per se. I will observe the breakouts and then trade the pullback. Is the Russell at a climax top? Huge up. You know, it has been a huge up move. I wouldn't necessarily look at it and call it a climax top, Eric, but it is extended, and I'll be looking for a pullback into a level of support. I haven't. And the reason I say that is the acceleration in Russell happened during the early stages, and then it blew on past its top. Susan, please review CL. I don't CL. Hold on a second. I will do one chart review of CL. Right now, here's the daily chart of CL, Susan. You know, I don't like taking the trades off the very bottoms, especially when, you know, I've still got my momentum in, you know, indexes or oscillators pointed down, because it's telling me that we have not reached a bottom yet. I would be looking for some consolidation to happen or a retest, and then look for a, you know, positive divergence on the indicators, because right now we're looking at you know, how much further can this fall? It's at a level of support right now, but nothing has reversed. It is extended away from the moving averages. So, you know, the only way that I'd look at trading this potentially at this point would be a reversion to the mean, which would be the 8-day or the 20-day. And so it's going to be, you know, $3 or $4 back to that area. And so at this particular point, I wouldn't be looking at you know, at buying anything for it. Let's get a real quick, I will throw on a fib retracement, make sure I get it from the right side. I'm going to take from this side. No, I'm not. I'm going to take from this low to that high, and just give you, oftentimes the 1618 retracement turns out to be a good level of support, and as you can see in this case, didn't, you know, it sliced through that pretty quickly. Where's the next one? The 2618. That is oftentimes an extension where you can look at a potential reversal. What do we see over here? It would be within a support zone if that's where it chose to turn over. But right now it's not giving us any indication it's ready to reverse. And as I said, if it's making a new low, but my oscillators are also making new lows, then I would be waiting for consolidation and for it to strengthen back up. It has to do something constructive. So with that, guys, I'm going to call it a day. Thanks for joining us. As I said, if you're a tweeter, join me on Twitter. And if you're not, you'll still get the monthly the single stock update on what, trade objective. So I got to get to the next session. Bless you all. Have a great time. Michael, thanks for joining you, and God bless everybody.
Thank you.
Bye-bye.